What does this mean for sort of the broader AI ecosystem if undeniably this is the most important cog in that supply chain?
Yeah, and the best indicator of demand conditions and market health is revenue performance, and they beat, right? So there was this debate heading into the quarter, is Blackwell delayed? Is there going to be, a sort of air pocket in revenue performance? And what we saw was, something I wouldn't quite call a delay in Blackwell, but let's say an imperfection in the pace of delivery, that's hitting gross margins more than anything else. It doesn't appear to be slowing revenue. Revenue is still beating. It's still growing very healthily. And so from my perspective, when I would look at all the, you can think about the suppliers in Asia, but you could also think about the peers or similar companies in the US, AMD, Broadcom, even, the sort of off-the-run ones like Tesla and Monolithic Power. These companies are likely to trade in line with this dynamic, right? So maybe trading off tonight, and maybe as people sort of catch their breath and analyze this a little more carefully, I would expect them to recover. Demand's still strong. Customers still want as much as they can get. If they can't get Blackwell today, they're taking Hopper. I don't see how that's terrible for their suppliers. I think it's actually good news.
Right. William, I do want to get your sense in very quickly on the whole narrative of the stock being priced to perfection. What does this mean for the stock going forward? So you're saying the stock would recover eventually. This dip would be bought into. But how do we build from here? And what does that mean for return expectations for a stock which is really shot through the roof?
Yeah, shot through the roof, but what have earnings done? So much more than that, right? So this concept that it's priced for perfection, we can talk about that for stocks that trade at 50, 60, 70 times earnings. This stock's trading below 40 times earnings. This is not, in my opinion, priced for perfection. It may not be particularly cheap. It's certainly more expensive than the average S&P 500 stock, but it darn well should be. I don't think it's priced for perfection. And I think there's more to go in the stock. We raised our price target to 148. We're raising our estimates. That's based on a 40 times PE. That's certainly not a shy or low number. But we don't think that's a sort of perfection sort of multiple given the growth rate that this company is delivering.